You were very, very oversold. This dinky bounce actually was around the corner. What happens from here, I think, is the more important point, which is that, you are off from the day's high, up from the day's low. It's 16 point in a market which is very oversold, and markets are not showing any signs of strength, which could be called as very durable. Is it time to start buying? See, why is easy to identify. Why are markets down? FIs are selling, dollar is up, earnings are bad. Where we are headed, it appears that we could be in for this long winter, maybe prolonged kind of an weak price action. And what do you do, I think, is the most important thing. So let's address not the why, where and what with Sandeep and with Naresh. So Sandeep, the why, हम क्यों गिरे हैं, we know it. Where are we headed, and what should one do? Let's address both that. Let's address that.
क्यों गिरे हैं? क्योंकि हम बहुत चढ़ गए थे इसलिए.
So that's the easy part. See, the why is easy. Where and what is difficult?
No, it's not difficult. So I think we can't be over bullish when markets are rising in a straight line. We can't be over bearish when markets are falling like they are falling right now. So I think pockets of value have emerged, especially on the large cap side, and that's what we need to capture at this point of time. In my view, market downside, let's say hypothetically, there's aggressive selling which is not absorbed, and I think somewhat more. The market can fall maybe 2-3% more, or maybe they would not. I don't know. But we are more near value emerging on the large cap side rather than trying to say that market will fall another 10%, which is the kind of theory going around now, which is always there. So when markets are rising, no one wants to be negative, and markets are falling and no one wants to be positive. That's not how investing should be done ideally. So this is the time to invest in large caps to start with as of now. Maybe some select mid caps which have delivered very strong numbers where visibility is very strong, and hold them, possibly expecting maybe some more minor dip, but upside being much more than downside.
Okay, Naresh, maybe you have the precise answer. Where is it that we are headed? Because a lot of people, we were chatting with Lawrence Belanco as well from CLSA. He's also seeing downside levels of even 22,800.
So the point is we are oversold. We've come down a good 10% plus from the highs. We're back to the 200-day moving average. We're back to the prices pre-elections almost. So if you look at the Nifty, we were at 23,100 before the elections. On opinion poll day, we were at 23,300. And in the same space, we are now closer to 23,500 odd levels. But a lot of stocks and indices are back to 22,000 odd levels also, which is almost like election day lows. So if you look at the bank Nifty, we are back into the territory where we were on the day of elections. Then if you look at stocks, you look at Reliance Industries, it is lower than where it was on the election day. So there are opportunities across the board. Whether we see a sharp bounce or we see a consolidation at 23,000 to 23,500, this is the zone 23,100, 300, 500, this band. Somewhere we get a strong bounce from. And post that, is the bounce stronger towards 24,500 or higher is what we need to see. But overall, given the oversold condition, this is the point of time where you want to be selective and look at buying rather than selling here.
Sandeep, is it fair to assume that the news flow now incrementally for earnings, for demand, everything will improve? And I'm just going to put this point out for our viewers here, Sandeep. Number one, government spending should get better. Number two, festival demand has been decent. Number three, monsoon effect would kick in. All these factors were not there in first half. So if second half is better than first half, which is what it appears, then what happens to the market?
The second half should definitely be better, and all the points you made are very relevant. One, it was expected that second quarter will be weakish because first there was a huge heat wave, then there were delayed monsoons. So crop, like you rightly said, the crop harvesting and sales by the rural the farmers, etc., was delayed, and that delayed the rural cash flows also, which also got reflected in the numbers of some rural lenders, etc. But if you look at the overall picture, like on the consumption side, things are still slow, at least on the FMCG side. But on the durable side, it's held on reasonably. Like it's not been so bad, and October apparently has been good for most players. The other big factor in India which drives consumption of many products is the whole marriage season. So if you look at the marriage uh, calendar, like there were hardly any marriage dates in the last few months. Next 2-3 months, apparently there are going to be 48 lakh weddings in India. That by itself is a huge driver of demand, and it's estimated that spends in this could be more than 6 to 7 lakh crores. So there are negatives, there are positives. On balance, markets post correction are reasonably placed, and I would think that from here on, plus minus couple of percent here or there, market should start stabilizing and building up. And then we have to see how 2025 will be. 2025 should be decent, I think. 10 to 12% market Nifty growth is likely.
So Sandeep, have you been buying already? And if so, what's the list like?
Yeah, so right now focusing on large caps. So among the stocks, taking into account the results and the correction which has happened, I think stocks like Reliance, Mahindra and Mahindra, L&T, to name, I think these three come to mind, Bharti Airtel. All of these seem to be decently placed. Some of the larger banks also fine, like Axis, ICICI, etc. And looking to also buy some consumption plays if they correct a bit more.
What exactly within consumption, Sandeep, are you looking at?
And if you look at HUL around 2200 if it comes, because from 3300 if it falls to 2200, I think from there we can look at a 15-20% gain from a large consumer company. 15-20% gain is quite good. Dabur sold off a lot, and I think that's also coming into value zone. Godrej consumers, so I think a lot of the FMCG companies are slowly moving into value zone, because most people are assuming that the weak demand conditions will keep on persisting. So demand recovery has got postponed, but ultimately at some stage it will come back, and then you won't get these stocks at near 52-week lows.
Vinay Rajani as well joining in. Naresh Mirani still with us, and so is Sandip Sabharwal. Sandeep, just coming back to you to the point that you were making, that some of these consumption staple names in particular are looking attractive after the recent correction. What I wanted to understand is whether this is a tactical trade still, or would you actually ride along and invest in these names for the long haul?
So what happens, Asha, is that these stocks become cheap enough, you buy them expecting a particular gain. Let's say you expect a 15-20% gain from a relatively safe sector. But then as things evolve, so let's say we bought it under the assumption that there'll be shallow growth revival. But then growth revival actually gets entrenched and these companies actually start doing better than what you expected. Then you hold on for longer. So I think it's very tough to predict at this point of time, because ideally consumption revival should have happened now after 2 years of slow consumption, but it has not happened still. So we have to see when it actually gets entrenched.
To a couple of stocks which in a sense have been really patronized by traders. Vodafone, the bottom has been knocked off. They raised a lot of equity, knocked off the debt. AGR issue has come, but the stock has gone from 17 rupees to 7 rupees. Actually 19 rupees has become 7 rupees. Yes Bank, after the promoters in this case, which is SBI and some P guys, this is one retail dominated stock. I think the 52-week high was 25, 26, maybe 30, I don't remember. But it has lost its bottom. The third is Suzlon. Naresh, I go back to these three stocks because it is relevant for the audience here. Suzlon, Vodafone, and then where exactly is Yes Bank headed?
So if you look at it, out of all these names, only Suzlon makes sense because that's the one which has totally turned around. Today also the stock has recovered a bit, is up for 4-5%. But overall, if you look at what has happened with Idea and Yes Bank, there has been no major change. We've broken down various price points. There has been no takeover of Yes Bank. There has been no Idea not holding on to the price points. So overall, in terms of the whole cycle, it is only Suzlon which still makes sense.
Vinay, what is your view on the market? Are we nearing a bottom, or this is a classic dead cat bounce which may not last?
Yeah, so positional trend is definitely down. Nifty has registered a fall of almost 2,800 from the all-time high, and it is right now hovering around its 200 days exponential moving average, which is everyone is tracking. So on the short-term parameter, it looks a bit oversold in last 6 trading sessions. Nifty has fallen almost 4%, and some derivative data points suggest me that there should be some pullback from current levels, because if we go by the put call ratio or compared to yesterday's data, put call ratio has actually risen while Nifty is still down, and there's sort of positive divergence on the some oscillators that we have been tracking in intraday that suggests that there should not be aggressive selling coming from here, and there has been a good put writing happening at 23,500 and 23,400 strike prices. That gives me an indication that after 6 days of consecutive fall, market should recover from current level. So I'm not betting on the bullish reversal, but yes, pullback cannot be ruled out at this level. We are right now oversold. If we go by the breadth is also positive. Advanced decline ratio is also positive. So from on Monday, I'm expecting recovery in the market. After 6 days of consecutive fall, we can expect some pullback. So I'm not betting on bullish reversal, but yes, from 20 through 23,530, we can go to 23,800 in the coming sessions.
We've been discussing what to buy, what not to buy in this market. Where do you think the excesses in the market, they still hold true and you'll not be a buyer? Sandeep?
Yeah, so I think this entire commodity space which ran up just because China announced some measures which always are going to fail because the structural issues are there. So I think people should avoid commodities on the PSU side. On an overall basis, I think still the retail and HNI participation, etc., is very high. So I think that's where we could still see time for the recovery to play out. So I think these two segments come clearly to mind, and many speculative small and mid caps where it's tough to define each stock by stock, but then there are a lot of speculative segments in the market where the valuations still are very, very excessive.
Also, Sandeep, since we're talking about some of the resilient pockets, what is it that you're making of this IT trade which is playing out? Of course, it didn't quite participate in the, bull run up until last month or so. But now the recovery that's playing out and the show of resilience, you think it's sustainable for IT services, the big ones especially?
It should sustain because I think they'll get some support from a weak rupee because of the strong dollar, which they have not got for the last few quarters. And on top of that, I think the US administration, which will be coming in, it will have strength across the board. The president, same party in the House, same party in the Senate. So I think there could be momentum in the US economy, which could drive uptick in the businesses of IT companies. I think this sector as a whole could sustain. Yeah.
1857, that is the HCL Tech stock for you. Nifty is struggling to make a comeback, which is very, very important for us to mark out that an oversold market is hardly coming in the green. I just want to remind everyone that just like markets do not go up in a straight line, they do not come down in a straight line. It is not that there is only darkness at the end of the tunnel. And 3 months ago, it appeared that there is never going to be an eclipse in the world. Both things are too good to be true. Right now, markets are factoring a lot of bad news ahead of its time. And 3 months ago, markets were ignoring all the possibility of a bad news. This will also turn because the fundamentals of the economy, where demand, interest rates, global economy is headed, I think all those interplays will start settling down. Sandeep's making a point on commodity. look at that entire China trade, Sandeep. I mean, 2 weeks ago हम कहते हैं ना, कान पक गए थे सुन के that money is going to China. Now money has started moving out of China. Before we started acknowledging that money is moved into China, money started moving out of China. So that long-lived China trade is also over.
Yeah, it had to, but it's just that the valuation in China is still very low. So I think that's the only trade which is there. If people are playing a Chinese economic recovery, that's not going to happen. But if you're playing a valuation play, I think valuations are really cheap in China. That's the only play. In the last 1 month, if you see, Hang Seng has fallen 15%, whereas the Nifty is down around 5%. So I think that's the reality of the entire China trade.
Just looking at what the screen is looking like right now, Eicher Motors, of course, is that's very strong contender today. There's Samvardhana Motherson holding up 3.5%, Balkrishna Industries up 3%, Apollo Tyres up 4.5% right now. Sandeep, in at least bits and starts, that auto ang trade seems to be coming back. Are you convinced though that they're kind of out of the woods and the post-festive season demand as well is going to be intact?
If you look at the company managements, they have been somewhat circumspect. Like, although the festival season demand in October was very strong and that's cleared out the inventory, but post that, most of the managements are not very aggressively pushing for strong growth, except for Mahindra and Mahindra, which has talked about strong growth both in its utility vehicles as well as tractor segment. So I think the proof of the pudding is still out. Let's see. I wouldn't be so negative. I think I would be somewhat more positive than most company managements because one, the harvest season and the cash flows have to come in and that could drive growth. And secondly, we could also see that the entire demand coming in from the huge marriage season that could also drive demand. So after a 25-30% fall in some of the companies, I would think that we shouldn't be so negative.
On the show as always, we'll let you go on that note, but here's a big story coming in.
If you like this video, then like, share and subscribe to ET Now.